Got a call from some of the smartest money I know who said you got to pay attention when the head of the dovish wing of the Federal Reserve says what she did today. Rapid QT is coming. That's what Lael Brainard said. You are my resident bull. What do you think today?
I'm still bullish, Scott. Let me start there. I think that the immediate future is going to continue this chop around the 4,600 level on the S&P 500, and it's specifically because of this tug of war between how fast is the Fed going to tighten, when are they going to start the quantitative tightening aspect of it, Can that be offset by share buybacks? I'm sorry, Scott, what?
In May. They're starting it in May.
Okay. The point that I'm trying to drive at here is that on a day like today, we're focused on the negatives. There are positives out there as well with some questions on them. The earnings trajectory is still positive. I expect you to chime in here and say that they're going to go down. Well, let's see. We've got a few weeks coming up of earnings season, and let's see what happens with earnings. Whether the top line is expanding enough and margins are hanging in enough that earnings will continue to grow, which is the projection and which continues to be increased upon, or whether the slowdown is going to swamp whatever happens with the top line. But that's a question yet to be answered. Another question yet to be answered in the short term is where exactly is inflation going? Because we know about Russia, Ukraine. We don't know what was happening underneath that. It looked, frankly, like inflation was starting to ease. We need a few more months for all of these things to settle out. Where I end up on this, Scott, is still bullish with the 5,030 year-end target. I think about my colleague Josh Brown, who said last week, yes, but what about the map? What about the terrain you get through to get there? And it's going to be choppy in the short term, but I feel bullish to the end of the year. Okay. I feel quite confident in it, in fact.
Okay. So one point I want to make on your bullish comment regarding buybacks. Bank of America is out with their flow note today, and they say, and I quote, while buybacks typically slow at the end of each quarter ahead of earnings season, buybacks by corporate clients slowed to their lowest weekly level in a year, and on a rolling 4-week average basis are down year on year for the first time since late 2020. Let me bring in Liesman, because Liesman, this wasn't just hawkish comments from any Fed person. This was Fed Governor Brainard. She's one of the most liberal and dovish members of the Fed. And the point that this person was making to me on the phone is I don't understand what in the world's going on with the market. You see what's happening in yields? How in the world are stocks hanging in the way they are?
Scott, I've had a question for a long time, which is the market fully pricing in what the Fed's going to do with the balance sheet, or are they ignoring it? I think we got a little bit of an answer today that the market had not fully priced it in. I actually register, Scott, if you look at the Dow trade, I was just calculating the other stuff, about a 260-point swing from we were right at the highs of the day there, up above 5,000, 35,000. And now we're, 3480, 3420, whatever it is, 34,820. And so the market definitely came off. And a couple things about Brainard. She has made this move certainly towards the center, away from being in the dovish swing over a period of time here. But you are right. This is the most hawkish I believe she's been, in part because it's well to remember, and this is maybe a little bit inside baseball for you, Brainard's in a new spot now. She is the nominee to be vice chair of the Federal Reserve. As such, she's going to be the policy pulling guard for the chair here. So whereas the chair said, I guess at the last press conference, yeah, we're probably going to do this in May, she said we're going to do it in May. Whereas the chair didn't provide a whole lot of context around how rapid it would be, she says it's going to be pretty rapid. Not only did she use the word rapidly reducing the balance sheet, but she talked about this two other concepts. Large caps. What's a cap? The Fed's going to have a certain amount rolling off each month. And where it sets that cap is how much it will allow to roll off before going back into the market and saying, I want to replace this amount. Large caps means a large amount of roll off, 80, 90, maybe $100 billion a month of treasuries and mortgage-backed securities. She also said we're going to rapidly scale up to that cap. that gave us two pieces of information. The first was we weren't 100% sure they were going to scale up to it. Now we know they are going to scale up to it. And the second thing is they're going to get there relatively quickly. So this is more, what do you want to call it, paper coming online for the market than previously. And this is not, by the way, a one-sided equation. Now that you know that the Fed is going to be doing a lot more of roll-off, now we have to understand how the Treasury is going to refinance this. And that's another question for the market. Clearly, they believe all of this engenders higher interest rates. And, you know, the market is reacting to that.
I mean, it tells me that people like Harker, who came on this network and weren't ready to commit to 50 basis points in the next meeting, are so becoming the outliers on the Fed. And the Brainard comments today, to me, are so important. Diamond warns it, right, yesterday. Brainard says it today. And now Josh Brown, the investor, says what?
I would say Lael Brainard's on a mission from God to rescue Joe Biden's midterms. It's going to be very, very difficult for the Democrats to put up any sort of a showing behind a president whom most of the country will look at and blame. Whether it's his fault or not is another debate. They will blame him if we're still talking about inflation at 40-year highs. People are innumerate for the most part. They don't read past headlines, and they don't like the way their lives are going right now. So you can look at wage growth, which at the low end of the income scale is fantastic. Unfortunately, it's not keeping pace with the growth in, let's say, what it costs to fill up an automobile. And this is what's really important to the public. So we already know that the Fed overstayed its welcome. They gave a little bit too much of a very good medicine that went from being a help to a hindrance. And now this degree of playing catch up, we know what the Fed normally does. They tighten and tighten and tighten until something breaks. What's going to break? I don't know. Watch credit spreads. Watch what banks are saying. Watch C&I loans. There's a million different ways for you to think about where we're going to see the damage show up first. But we do not get out of a bout with inflation like this without some sort of a recession. Doesn't have to be imminent, but that's probably where things are headed. And they feel that they have no choice now politically because of how bad the headline risk and the resulting political fallout is. And that's just where we are. So that's the negative. By the way, the answer to the riddle on the buybacks, the borrowing costs have gone up extremely high relative to where they were. So, of course, people are hesitant to keep pulling the trigger. And actually, new announced buybacks in the first quarter at a 5-year low as well.